Hello, my name is Bruce Brinesman. I'm CEO of Envoy Financial. It's our pleasure today to partner with Citygate. We have had a 20-year relationship and in the opportunity to participate in bringing you critical information that will be important for your mission. You'll have some opportunities today to hear the information that will apply directly to you, and then you'll be able to make some decisions about how you're going to respond. My personal thanks to John Ashman and the great work that he does. And when I go on to the Citygate Network website, I see the Coronavirus Toolkit. And I think you consider this webinar part of that toolkit. You need to know that Envoy Financial has no financial interest in the results of the webinar. We're simply doing this to be able to bring you the best information because as brothers and sisters in Christ, we're concerned about how all of us will survive during this critical time. We know that, in fact, we are better together. So this morning and this afternoon, we're going to focus on two key programs, 7A loans and 7B loans. So kind of get used to that terminology, 7A and 7B. The 7A loan is an SBA loan and is really concerned with relief control first, and then secondly, for personnel issues. So it's concerned with how, in fact, we're able to keep our staff available and working. The second, 7B, is more to do with working capital and the monies that are needed to keep the organization going. So 7A and 7B. The opportunity that you will have, the choice that you will have, will be to apply for either one or the other of these loans. The first one is directly through a bank, and the second one is directly with the government. So when you say apply, what does that mean? Well, mentally, as you're listening to the presentation and the information that's there, I would have you think about the last time you applied for a mortgage and all the paperwork that you needed to provide in order for that to happen. Now, the government is simplifying this, and we'll have some options that will be available to help you, but just know that you are able to make application for both of these loans yourself. There are four key concerns that the government has in the application. The first one is, who are you? The second one is, are you eligible? The third is, can you pay it back? And the fourth, did you use the money correctly? So use that as a context for the conversation that we're going to have that is coming up. Who are you? Are you eligible? Can you pay it back? And did you use it correctly? We know that the two laws that were passed, that each one of these come from, 7A and 7B, were really put in place to be able to support our economy and to be as a stimulus for businesses. Now, one of the wonderful things about these programs is that it is also specifically includes 501c3 nonprofit organizations as well as for-profit. So we're going to talk about this today from the standpoint of a 501c3 not-for-profit tax-exempt organization. Well, that's by way of introduction. Today, I'm going to introduce you to Don Rasmussen. And Don is the president of Quartermaster Tax Management. Quartermaster Tax Management. And they are really experts in these kinds of loans, in these activities in relation to for-profit, but also specifically not-for-profit organizations, missions such as yours, churches, etc. And so I've asked Don to come on and to take us through in a very direct presentation. Probably take around 25 minutes, somewhere in that area, so you can set your watches and your expectations, to be able to take us through these loans and a couple of other issues that will help you. At the end of the presentation, I'll come back and we'll review and be able to outline next steps for you. So please plan to stay on for the whole time. It will be important, and there will be important information in each part of the presentation. So with that, let me introduce you to my friend Don Rasmussen of Quartermaster Tax Management.
Well, listen, everyone, thank you very much. My name is Don Rasmussen. I'm the managing partner here at Quartermaster Tax Management, and we consider it a privilege and an honor to have this conversation with you today on how we can educate you and come alongside you to help take advantage during this very difficult crisis on how you can make sure that things are covered there at your ministry, at your church, wherever it may be. So what I'm going to do is I'm going to take the next 25 to 30 minutes, and I'm going to walk you through on exactly how you can take advantage of the CARES Act and as well as the economic disaster portion of the SBA process. So, well, again, I'm going to explain a little bit about Quartermaster, and I am the managing partner here, and we're going to talk a little bit about our conversation today is about the SBA disaster relief. Our goal today is to educate you and your team there on how to take advantage of it. So we're going to talk about 7A and 7B for faith-based 501c3s. Because again, there's going to be some distinctions specifically that you are a 501c3 to be able to qualify for these benefits. A little bit about ourselves. We have a specialized team of CPAs and accountants and tax strategists here in our offices to be able to serve, and we're going to focus specifically again about how we can help people take advantage of the CARES Act and the economic disaster assistance of 7B. We do work with faith-based charities and churches and ministries all across the United States. So it's not limited to one particular side or state, but all around the country. And we understand the unique financial challenges that faith-based charities are facing right now. Of course, you know, in just the conversations I'm having with different ones around the country, you know, giving is down and just the keeping staffing on is a big challenge. So we want to bring a solution. And I would say the U.S. government has done their best at creating some solutions for you. So we do know this here, that disasters have come year after year. We just recently had the tornado out in Nashville, Tennessee, which is very devastating. And most people just sit aside on the sidelines and let the world happen until it impacts us. And the reality is, right now, it's happening to you, to your ministry. And of course, we're helping those affected by the COVID-19 apply for these loans. Because until it affects us, we really don't realize the impact. And I don't believe there's anybody in this country, ministry, businesses, individuals who have not been impacted by the COVID-19. So what was passed most recently was the $2.2 trillion CARES Act. And it stands for, of course, the Coronavirus Aid, Relief, and Economic Security Act. And it was all based because of the coronavirus and how it's just ravaged our country. But it has become law as of Friday, March 27th. So the coverage date. So I'm going to get into the weeds, if you want to call it. You're going to see up in the right-hand corner 7A. And for the bulk of the beginning of our presentation today, we're going to be talking about the CARES Act. And the number one thing that you hear on the news, the number one thing that you're finding out is that about the Payroll Protection Program. This is going to be impactful in a lot of different ways, as you'll see here in a second. The bill was called HR 748, Section 1102. And that was created the coverage dates of February 15th to June 30th. So that's the time frame that they're looking at to determine eligibility. Basic eligibility is any business concern, nonprofit, veterans organization, and tribal organization, but not more than 500 employees generally. There are some exceptions to that, but from a ministry standpoint, you're going to be 500 employees or less to be able to qualify for the Payroll Protection Program. And I may refer to it as a triple P through my conversation today. But let's talk a little bit about charities. So again, the Payroll Protection Program is available to any business already qualified as a small business concern, as well as other businesses. 501c3s and 501c19s are ones that are eligible as well. Making sure that it, as a nonprofit tax exempt organization, is required. So 501c3 is imperative, so you can be eligible for the program. So what does it cover? Well, primarily, as the name is descriptive, is the payroll protection. So we're looking at payroll costs, and this includes salaries, wages. Again, tips are covered in here, as well as commissions, paid leave, healthcare payments. So if you're providing healthcare to your employees, the employer portion of this here would be covered through this program. Retirement benefit payments. So if you're contributing to a 403B through Envoy or another organization or an IRA, a SEP IRA, simple IRA, anything such as that, The contribution during that time frame is going to be part of this as well. And then, of course, if you have any independent contractors, 1099s that you utilize inside your ministry for whatever reason, they would be part of that as well. But the payroll costs do not include compensation of an individual that's in excess of $100,000. And so I'll talk about the calculation in a second of how they determine that. But again, keep in mind, over $100,000 does not come into this equation. So what you will do is you'll look over the average monthly payroll incurred within the last year. So for 2019 is what the basis is determined from. Then you'll multiply the average monthly payroll times 2.5. And that'll create your loan cap. But the overall loan cap that is available for any particular charity or organization is $10 million. That's the maximum. So an example, if you have $1 million payroll in your particular organization, and again, maybe it's 100,000, but it's going to be multiplied, and this is a monthly, multiplied times 2.5. So if you have $100,000 payroll per month, then it's going to be $250,000. If it's 10,000, it's going to be 25,000. That's going to be the cap for your particular organization. All right. What can you use this money for? First of all, you can use it for payroll costs, which again is descriptive in the name, group health care benefits, employee salaries, wages, payment of interest on any mortgage obligations. So if you have your building, you have two options here. So if you have a mortgage on it and you're buying the building, the interest is a part of this here, will be covered under the plan. Your principal will not be, but your interest will be. So that's very important. Or as in most cases is rent. So your rent is fully a part of this. So they'll cover your rent for that period of 8 weeks, or pardon me, from February 15th till the end of June. And your utilities. So also, if you have any debt that was obligations that was prior to February 15th, then the interest on that will be covered as well. So the nice thing about it is they're very comprehensive in what they're going to cover. And we'll come back in a little bit and talk about the forgivable part of it. There is no requirement that the charity is unable to obtain credit elsewhere. So in a lot of loans, they will require you to go out and find some other resource first. That's not a requirement under the 7A program. Secondly, they are non-recourse. Now the key here, if the proceeds are used for except for if they're used for unauthorized purposes. So there are some guidelines on what this money is to be used for. And so if it's used for anything else, of course, then it becomes an issue. As it stands right now, it's a non-recourse. There is no personal guarantee required. So your board or the president of the organization, no one is required to personally guarantee this loan. There is no collateral required. So under the 7A program, I'll make this distinction. There is absolutely no collateral required, no buildings, no real estate, no equipment, anything such as that. Now, it does require what they call a good faith certification. That is, the current uncertainty makes the loan necessary to support ongoing operations. So we're attesting to that part of it. And again, I had a conversation this morning with actually a pastor here in the North Carolina area that's over 35 churches. And his question was, of course, our church doesn't have the need right now. I said, well, here's the thing. We don't know how long this is going to go on. And so I would encourage, as I will in you, that it's like the old saying is, it's better to have it and not need it than need it and not have it. And we know this is out of that 2.2 trillion, there's only about $360 billion that's available. And with knowing how many businesses and ministries and organizations that are going to applying for this here, I just encourage you to take advantage of it as soon as you can. The funds will be used to retain workers, maintain payroll, or make mortgage payments, lease payments, and utility payments. So that's what they're looking for, is to make sure that this is going to be used for proper things. And you're making that certification that will be done. So remaining balance after forgiveness. So as I'm going to talk about in a second here about forgiveness and the guidelines for that there. Anything that's left over, so if there's a portion, and I'll give you an example of that in a little bit, then that's going to be guaranteed by the SBA, and the maximum maturity is for 10 years from the date of loan forgiveness. So whatever portion we're able to get forgiven, it's got up to 10 years after that is your payout opportunity. So you can do it less, but no more than 10 years. The interest rate has been capped at 4%. It could be less, but it cannot exceed 4%. The payment deferment. So the good news is they're going to give anywhere from a 6 to 12 month deferment of having to make payments. Then, of course, that includes principal, interest, and fees, origination fees. So generally, when you apply for a loan for SBA, there's going to be some type of closing costs, origination fees. That's been waived for you. The origination costs are going to be covered by the SBA directly with the bank. And so they have a percentage based upon the size of loan that will be reimbursed back to the bank from SBA. Overlap. So if you're applying for the 7A, keep in mind the 7B, which we'll cover momentarily here, is economic injury disaster loan, is also available. And it's available across the country, but I'm going to give you some specifics on, yes, it's in all 50 states in the District of Columbia, but there are some nuances there as well, and we'll talk about that when we get into 7B. A recipient of a disaster loan is generally not barred from participating in the payroll protection program. The likelihood is, for those we've talked to, that the 7A is going to be the first one that are going to receive. 7B is latter. So if you already have a 7B in place, then there may be some issues there. The likelihood is the people who are watching this webinar have not applied for a 7B, or probably have not been approved for a 7B. So there should be no problems there. Loan forgiveness. So this is the one that when I talk to people around the country, they really want to know, what does this mean? So the SBA and the IRS have worked together to create this loan forgiveness. Now, it is a good thing because this is just money you don't have to pay back. But how do they determine that? Well, the principal forgiven in the amount equal to the following costs incurred during 8 weeks after the loan is originated. So we're not the whole loan per se, but it's going to be the 8 weeks after the loan is originated. So this can cover payroll costs, mortgage interest, rent, utilities. Those are the things that can be covered inside of the loan forgiveness. All right. So reduction if salaries and wages reduced. Now there is a little caveat to this here, and that is if you had to reduce salaries and wages, there is a percentage reduction as well. And I won't certainly go into all the details here just for time's sake, but I'll just read this here. Forgiveness reduced by the amount of reduction of salaries and wages of any employee that is in excess of 25% during the covered period compared to the most recent full quarter. So what they're looking at in a nutshell is the time frame that we're looking at, the 8 weeks. Did you reduce the salaries or wages by in excess of 25%? Then of course it'll impact how much of the forgiveness of the loan will be. Again, excludes employees with annualized pay greater than 100,000. So reduction-wise, exemption for those rehired within 30 days of enactment. So it's been enacted, of course, on March the 27th. So there is some offset, and I'll give you an example here in a second, where if you rehire within 30 days. So that's good news, so that if you had to furlough or lay someone off up to this point, that by rehiring them, you're going to be able to take advantage of this forgiveness. Now, there's a thing called FTE headcount you're going to hear. I'm not going to get into, again, the weeds on this here, but that's how they determine, and I'll give you an example of that here in just a little bit. And of course, there's a salary reduction test, which I just mentioned, which is at 25%. So I'm gonna give you an example. So we have a charity that has 27 full-time equivalent employees. That's what FTE stands for, full-time equivalent employees. Their annual payroll, it's a very large ministry, is $1 million. So their average monthly payroll is $83,333. None of these employees are paid over $100,000 annually. The maximum loan that they can qualify under the payroll protection program, or the 7A, is $208,333. So that's just to kind of set an example. However, the charity only kept its 5 key employees on payroll when it was ordered to close, and they're paid about $340,000 annually, but they laid everyone else off. Okay. Unfortunately, that happens, and of course, you want to keep your key employees there to make sure the ministry continues to flow. So in this case here, we got $208,333 was a loan. It was originated from the bank on April the 10th. The charity has the following unavoidable expenses over the following 8 weeks, meaning that this is that 8-week test that or the snapshot they're taking. So their April, May, June rent, $55,800, utilities, $2,100, 5 key employee salary was $52,308, They had interest on some finance supplies that they had done so before February 15th, and that again is part of that. So we have $130,208, which is at this time forgivable. Now, what changed was the shelter-in-place order, let's assume, was lifted on April the 24th. So it's 2 weeks after the origination of the loan. So now we have 6 weeks left of the loan of bringing employees back. And they rehired half of the hourly employees, which the wages for that 6-week period were $39,600. Therefore, the total allowable uses for the loan proceeds will be 169, which is the 130,000 we talked about. They brought the other employees back. Now it's added 39,600. So we got 169,808 of the 208 borrowed. So that means that there's roughly about just shy of $40,000 that's going to be left that will not be forgiven, which would be, as I mentioned before, payable up to 10 years. It's going to be at the maximum of 4%. So just keep that in mind. Whatever is not forgivable will fall under the other guidelines that I mentioned earlier. Now, there's a thing that's changed here. You're going to see up here in the right-hand corner, it says 7B. Now, this is the only thing I'm going to cover currently about 7B, but inside the CARE Act was a provision to kind of get some money into people's hands as quickly as possible. And this falls under the EIDL, as you'll hear it referred to, the Economic Injury Disaster Loan. And what that does is just the basic eligibility to qualify for this here is any business concern, nonprofit, again, veterans organization or tribal business, not more than 500 employees. A borrower can request an advance of $10,000 to be provided within 3 days of applying. So in a nutshell, so you got 7A, which is done through the bank. 7B is directly through SBA. And they have a site that's been set up for that, and we'll talk about that further as we get along here. But what that means, as soon as you apply, within 3 days, they are going to cut you a check for $10,000 for your ministry. And again, that's before it's gone through the underwriting process and such. The advance can be used for providing paid sick leave, maintaining payroll to retain employees, meeting increased material costs, making rent or mortgage payments, repaying obligations which cannot be met due to revenue losses. But keep in mind, the advance is not required to be repaid even if the loan is subsequently denied. Again, the advance does not need to be repaid even if the loan is subsequently denied. But if you get the payroll protection loan and that $10,000 would be ultimately, it becomes an advance out of that if you do not get approved through the 7B. So just keep that in mind. Now I'm back to 7A. So we talked about 7B. I'm going to get more in depth here just a little bit. 7A, a lot in the news about the individual tax relief. And this is going to be applicable to you that are on staff there at the ministry, but also to your constituents and to your employees and everybody else that is that's a taxpayer. And that is for 2020, it's going to create either $1,200 or $2,400 as a check or a deposit back to the taxpayer. So if you're single, it's going to be $1,200. If it's a married filing jointly, it's $2,400. If you have children that meet the criteria as a dependent child or qualified child, typically under your tax return, this is going to be an additional $500 per child. So if you have 3 children that meet the qualifications, that's $1,500. You're married filing jointly. So just shy of $4,000 is what's going to come to you to help put some money in your pockets to help get over this hump. Now, keep in mind, here's the criteria. So for married filing jointly, it's $150,000, single it's $75,000, and head of household it's $112,000. That's the cap. Well, let me back up. That's where they start at. If you go up from there, if it's excess of that, up to $198,000 for married filing jointly or $99,000 for single, there's a 5% reduction of that check. So if it's 5% off of $2,400 or 5% off of $1,200 from $150 to $198 or $75 to $99. So recovery rebates. Rebate is going to be treated as a 2019 payment from the IRS. Refunds to be made as rapidly as possible. No refund or credit shall be made or allowed under the subsection after December 31st. So it has to be paid by December 31st of 2020. No overpayment interest. You don't have to worry about any of that. And for those who have not filed a 2019 return, which is highly likely just because they've extended or postponed the filing date to July 15th, and of course, if you file an extension, they will determine that based upon your 2018 return or using the SSA 1099. So that's where they can either or, but most likely if you filed, if you have not filed in 2019, they're going to use your 2018 tax returns to determine which one you're eligible for. And what they're looking for, of course, if you're married filing jointly or single head household, and if you have any qualified children. And of course, confirmation letters will go out to all the taxpayers after they receive their payments. Now, this is extremely important. This is about retirement plan distributions, such as IRAs, 401ks, 403bs. So they're going to allow you to take up to $100,000 out of your plan. And I'll explain all the specifics on this here, but there's a provision in the IRS code called 72T, and it just states in a nutshell that if you're under 59 and a half, you're assessed a 10% penalty if you withdraw money from your IRAs or 403bs, 401ks if you withdraw. And so they're exempting that now, which is beneficial. But a person to be eligible for this provision either has to be diagnosed with the COVID-19, the spouse diagnosed with COVID-19, but there's also some looseness to that as well. So it goes into the details in the code. It says who experiences adverse financial consequences as a result of being quarantined. Of course, you know, the shelter in place, the stay at home, maybe they were furloughed, laid off, having working hours reduced. They have to be at home to take care of a child, closing or reducing hours of the business or ministry. Of course, all these are factors. So the likelihood is it's going to cover everybody. There's a few exceptions that people like who are at work and have no reduction, like, for example, in our office, which is very, very busy right now. Retirement plan distributions. The distributions must take place in 2020. The income from distribution recognized ratably. Now, what does that mean is generally when you take money out of an IRA or any qualified plan, it is taxable, ordinary income taxable in the year that you remove it or take the money out. So in this case here, they're going to allow you to recognize this if you decide not to pay it back or put it back into your IRA over a 3-year period. So if you take out the $100,000, you're looking at recognizing $33,333 a year for 3 years. Now, you can repay it and not have to pay the taxes. So let's say, for example, you do take the $100,000 out and you go ahead and put $33,000 back up into your IRA, then you're not going to have any taxable implications this year. And maybe next year you do the same thing, and the next year you do the same thing. So you can nullify that tax implication. Of course, the exemption from trustee to trustee rules will be applicable here, and withholding rules. So generally, when you take money out of a 401k, 403b, they're required to withhold 20%. From a tax standpoint. That's been exempted as well. So you don't have to have it go to a trustee, and you don't have to have any withheld. Now, if you don't take a distribution, but you take a loan from a 401k, 403b, applies to loans made within 100 days of enactment. So it's going to be 6 months from March 27th. The limit used to be 50,000, it's been increased to 100,000 is the loan that you can take out. This is very interesting, though. It says that you can take 100% of the balance out up to, of course, the maximum of 100,000. So if you have $105,000 in your plan, you can ultimately take out $100,000 as a loan, where it was, again, limited at 50%. The outstanding loan repayment is delayed between enactment and the end of the year is delayed for 1 year. So meaning that you're able to delay paying it back and starting up payments to go back into your 401k or 403b through this exemption. One last thing here, it won't be applicable to most who are on here, but if you are over 70 and a half, there's a thing called required minimum distributions, and actually that just changes 72 if you going forward, but they're waiving the requirement of RMDs. So no required minimum distributions coming out of qualified plans for 2020. So we're good to go there. This is extremely important, and I want you to pay attention for all of our charities that are watching. So this first one is not as significant, but it's a blessing, but it's encouraging people who cannot itemize because of the new tax code to be able to give and be able to do what we call above the line charitable deduction. Above the line just means it's going to go on the first or second page of your tax return, most likely the first, versus a Schedule A, which would be itemization. So it begins in 2020. Of course, you cannot be itemizing and take advantage of this here. It is limited to $300 and it has to be cash. Now, when they say cash, they're referring to a check, credit card, or actual cash. What is distinction there is you can't use appreciated assets like a stock or something to that degree under this particular case. So it's got to be cash in any one of those three ways, but they're going to be able to deduct that off of their above the line. So they're going to not have to pay taxes on $300. No donor advised funds. So it does not apply to donor advised funds, and you cannot double up. You can't, what we call double dipping. You can't take the $300 above the line and then also do a Schedule A itemization. Now, this is the one I want you to really pay attention to, and this is going to be for those who are charitably inclined, who have the ability to do so, and they don't have to necessarily use their income. They could use it from assets or whatever the case is, and that is contribution. So up to this point under the new tax code, it was limited to 60% of your adjusted gross income. So if I have an adjusted gross income of $100,000, $60,000 is all I can deduct for my charitable contributions. Under this provision, it's now gone to 100%. So again, if I have $100,000 income, I can fully deduct a $100,000 contribution. But like I said, it doesn't mean that I'm going to take all my income and give it to charity, which is not a bad idea. But the reality is I could use another asset and do that and get 100% deduction. So again, there's some creativity there. We can, again, have conversations in the further about that as well. But it really is a great opportunity to be able to get your higher income earners, or just people who are philanthropically inclined, charitably inclined, who want to give during this crisis and to help out more people. It just gives them an incentive to do so. If they're, let's say, for example, I have $150,000 gift that I give because of, again, assets or whatever in other accounts, and I only make $100,000, that other $50,000 can be carried over up to 5 years. So I can use it next year if I don't use it all up in 1 year. Businesses. Now, when I distinct businesses, this is C corporations. This is not S corporations. So I wanted an S corporation is a pass through. It passes from the S corporation over to their personal tax return. A C corporation, on the other hand, has been limited to 10% in the past. That's now been increased to 25% of taxable income. So for those who have those C corporations, they could be a smaller C corp or a larger C corp. They've increased that. Again, with charities that we talk to that maybe get food in because they have a feeding program, for those who do donate it, companies, C corporations, they're now going to be able to get 25% versus the 15% that they've been able to use in the past. Now, again, I'm going to stress this here. If you're going to take advantage, which most people are going to, of the forgiveness, you won't be able to use this. But if you don't use the forgiveness, this employee retention credit is applicable, which is 50% of qualified wages up to $10,000. So you get a $5,000 credit is what you can use. It's against employment taxes, and it is refundable. I don't have the time to go into, but there's another act that was passed called the Families First Coronavirus Response Act, or the Family Leave or the Sick Leave Act. It will be reduced by taking advantage of that. And of course, eligible employers are, because it's suspended by the government or decline in gross revenue or receipts. Again, you can't claim it if you're going to take the forgivable loan. But like I said, most small employers and ministries will opt for the forgivable loan because it's much more advantageous. Now, I've covered everything in 7A. I'm going to transition over to 7B. It's not, quite as in depth. But the first thing I want to say about 7B, it's covered in all 50 states in DC currently. And that just means that anybody in the United States that meets the qualifications I've already covered can apply for 7A. 7B, on the other hand, is still approved in all 50 states in DC. But there are some exceptions, and I'm going to show you an example of that here in a second of a state that we've worked with. So what's the criteria for the 7B? Everything I'm going to cover right now is going forward as 7B. First of all, credit history. They do require a credit history on 7B that they don't require on 7A, and that is going to be 640 plus. Now that's as the guidelines that have been put out. Listen, what we are seeing, we've seen the application change twice in the last 3 days by SBA. Who knows what they may do? They may relax this. So that's part of it. Also, they will determine the applicant's ability to repay the SBA loan. So they're going to look back at some historical stuff and see, if you're running in the red prior to this crisis, then that's going to diminish the opportunity for you to be able to get some assistance there. And then it goes back to that comment I said earlier, the declared county. So some states, and California is an example here. So this was last week. I did a presentation for a group out in California. These are the states the counties in California that are approved. Now this can change, and there's actually a website that I'll show here in a second that they can go and look and see if that'll change. Like North Carolina, the whole state is exempt, is qualified, is deemed qualified. But California, on the other hand, they have to be in this particular county, or they have to wait till that county comes up. So just keep that in mind, that if you're in anywhere in the United States, you want to make sure you go to the website to verify that. So back to the basics, what businesses or charities are eligible to apply. Again, these are working capital loans, as Bruce had mentioned earlier. Again, it does apply to nonprofit organizations, and it includes charities directly affected by the disaster, as well as charities indirectly related, meaning that your community has been impacted, so that's how it's impacted you as well. The terms, how much can you borrow? It's up to $2 million. So again, this is aside from the payroll protective plan, the PPP. So that's distinctive between these two. The interest rate on this here for nonprofits is 2.75%, and you can have as much as 30 years to pay it back. Eligibility for these working capital loans are based on the size of the business or the ministry. So that's going to be the determining factor of that. How can you use the funds? Well, number one, these again is our working capital loans. They can be used for paying fixed debts, payroll. So again, you're going to get a loan for the 8 week, or ultimately the 8 weeks, the forgiveness part of it. But who knows how long this payroll is going to go on. So or the need for help. Accounts payable and other bills that could have been paid had the disaster not occurred. Now, the loans are not intended to cover sales or profits or for expansion. So just keep that in mind, that if you're expanding the ministry, starting up new locations, whatever the case is, that's not what's going to be covered in this loan. Again, the EIDL up to $2 million, up to 30 years. We're seeing mostly 7 and 15 years, pretty common. Nonprofits, again, is 2.75%. Typically monthly, there is, again, a deferment of this here. And whether or not they're going to accrue interest is wait to be seen. It sounds as if they're going to give at least a 12-year, if not a 12-month or 2-year deferment. Again, all fees are going to be covered by SBA, no points, no closing or service fees. It's going to take about, well, let me say this, it's been taking about 30 days. We expect that's probably going to get closer to 45 days on the bulk of the loan. The 10,000 I talked about earlier, that's within 3 days. But because of the demand for this here, we expect it's going to push it out at least 2, maybe longer weeks. First payment that they're going to receive, that you're going to receive other than the 10,000 advance, is going to be $25,000, and that's 5 days after approval. Subsequent payments will work with the SBA case officer. This one here does require collateral, so they're going to be looking for buildings or real property. They're going to be looking for equipment, machinery. Now, it will not prevent you from getting the loan, but they're really wanting to have collateral. Of course, anything over $25,000 requires collateral, but like I said earlier, SBA will not decline a loan for lack of not having collateral. It's going to be requires borrowers to pledge what is available. So one other criteria, as I talked about the counties, you have to make sure that your church or your ministry is located in the county that is declared a disaster. In other words, you can't just have a P.O. box there, or your home can't be there and the ministry be in a non-qualified area. It's got to be the actual physical location. All right, so again, applicants will not go through a bank for this one here. It comes directly through SBA and the U.S. Treasury. So as compared to the 7A, where it's going to go through a bank, this one here is going to come from the U.S. Treasury. And of course, you're going to go to this website, which is SBA's Disaster Assistance Program. And I'm going to repeat this a few times, and this is disasterloan.sba.gov/ELA. Again, you want to distinguish that is ELA. There's no obligation to take the loan if offered. Now, I want to reiterate this one more time. It is better to have it and not need it than need it and not have it. So I'm encouraging everyone we talk to, apply for it. Number one, you're going to get the $10,000 up front. But number two, whatever you are formally approved, it can be sitting there and you don't have to use it. It can, you can always say, things are better now, we don't want it, and move on from there. The maximum unsecured is $25,000. You can have other SBA disaster loans in addition to this here. You just can't consolidate them. So if you have another SBA loan out there, you just cannot consolidate the different ones together. I want to stress this. When you do go on there, if you do it yourself, you want to recheck the filing requirements to make sure everything is submitted. We find the biggest reason for delays in processing is due to missing information. And unfortunately, with the demand, you're going to be, if you don't have it right, you're going to put it to the side, and who knows how quick you're going to get back on the on-ramp to get back in the queue. And that's the thing I want to stress to people, is making sure that you have all your T's crossed and your I's dotted when you submit that application. Now, if more funds are needed, in other words, you apply, you get approved, and you find out, oh, we need some more, they're going to just require some more supporting documentation and a written request of doing so. Now, if you find that you're approved for 100,000, you don't need all 100,000, and you don't want to, continue on with that loan, then you can ask them to reduce that as well. So it goes both ways. If for some reason it is denied, as I said earlier, the $10,000 advance, you don't have to pay back. But if they have an appeal process, it's up to 6 months, or within 6 months. Again, new information and a written request has to be submitted. Now, again, stressing, make sure it's a flawless application. Right now, they've only earmarked $8 billion for 7B. We expect that to increase just because of everything that's going on. You have two options. Number one, you can do it yourself. And everything I've covered here is, and I'm going to reiterate here in a second, is we encourage as many people that have, I call it the intestinal fortitude and the focus and emphasis and time to do it themselves. And that is, of course, for you do it yourself, your 7A. The facts are, to keep in mind, though, if you do this, the banks are going to be completely overwhelmed with over 10 million business owners trying all at once to get in. So we're going to talk about some of the solutions alternatives you can look at. Their phones are going to be overwhelmed at these banks, and the disbursement of these funds must be done properly and within an 8-week time frame and documented properly in order to be forgiven. Now, I didn't say this earlier, but I'm going to say it right now. When you set this up and when you get that 7A money, you need to make sure that you document how it's used. Because for it to be forgiven, you've got to prove that it was used for the things that they've allowed, which is payroll and mortgage interest and rent and things such as that. Because if you use it for other things, then the forgiven issue becomes null and void. So documentation, documentation, documentation. Most of the banks are going to be remote. They're understaffed right now because for the most part, if you go to a bank, it's going to be drive up only, and you can have to set an appointment to go inside that lobby. And of course, who knows, there's going to be, mask and everything else that comes into play here. Security implications become an issue. And that's our concern there, is that it's just going to be a madhouse. As a matter of fact, one of the CPAs I talked to this morning, like I said earlier, they look at it as more of like a run on the bank. All right, so do it yourself 7B, you go to the website. So 7A is through the bank, 7B is on the website, and of course they have an FAQ, but make sure that you do the /ELA, whether you're applying or whether you are looking for more information on questions. So this is the actual physical application. You're going to need this is for 7B again, SBA Form 5 or 5C. 5C is for self-employed or sole proprietor. 4506T, which is a request and a transcript from the IRS. Complete copies of most recent federal income tax returns. The schedule of liabilities, which is 2202. A personal financial statement of 413. That is waived, if I'm mistaken, for nonprofits. And other information may also be requested. So when you go into the website, it looks like this here. Again, they're going to want to know if any managing members or affiliates, all the tax documents for those as well, P&Ls, and of course, year-to-date profit and loss statements. And then of course, 1368. Now, when it says sales figures, it's talking about revenue that's come in. So we have to look back the last 3 years to complete Form 1368. So go to apply as I wind up here is, again, going back to SBA Gov /ELA. I'm going to admonish you to make a paper copy of the documents. Fill them out paper-wise. You can still go on the website, but the reality is that this place is being inundated. And I would rather, versus not being able to get my stuff in, I'd rather get them a hard copy. I would suggest that you use FedEx or UPS overnight, get a signature required, and send it to Fort Worth for them to get that process. You just want to get in the queue as quickly as possible. Again, this is a website, and when you go there, you can click on eligible disaster areas to determine for 7B and 7B only of whether or not your county is eligible. And then, of course, you apply online, and then you can always check your status. So the first option is do it yourself. And again, we encourage, I spoke to over 2,000 last week and through webinars and such. We encourage as many as we can to do it themselves. We've had many who've tried and then come back, but we do have a second option, and it's more of a turnkey. And that's where our team here of CPAs and accountants and support staff will do it for you. We have a lot of experience to maximize your loan potential, and we're going to double check and triple check to make sure there's nothing missing so that would delay your loan. And it really is a turnkey. So if you want to take advantage of it, I'll talk more about what that looks like here in a second, but go to getcovidaid.com/envoy. And of course, we can assist you. So what's involved if you do engage us to assist you is what we call COVID-19 consulting. Of course, we're going to evaluate your ministry for a grant, loan, tax, and credit opportunity. We're going to look at everything that's possibly available for your ministry. We're going to organize and review existing tax returns and financial data that's required to apply for everything. Perform necessary calculations to estimate your financial impact of the tax credit. So there's some tax credits that I did not cover just for time's sake that we'll look at as well. Collect and format supporting information for any loan, grant, or tax credit, meaning that for 7A's example, we're going to package it all up and we're going to get it. We have a relationship with a bank that will provide that turnkey, or if you want to go to your local bank, we will package it up and get it off to them as well. Gathering and preparing documentation on loan proceed usage. Remember, I told you about compliance, making sure that it's structured properly, that we have accountability, very, very important. And of course, maximizing the forgiveness amount through proper compliance monitoring. So that's the COVID-19 consulting. Loan application, we're going to identify appropriate loan offering, prepare loan documentation, obtain monthly sales or revenue figures, prepare the pro forma P&L statement for application, personal financial statements for application, schedule of liabilities, assistance of completion of all loan documents, and of course, we'll also try to field as much of the questions from the SBA as possible, and we structure that in a way, whether they contact us directly or contact you, we're going to take the bulk of those questions. So the SBA recommends for us to do everything like this. They know how much work goes in here is $2,500. And of course, we can do just the 7A, and for us to do all that, we're looking at $1,000. We'll do the 7B for $1,875, but if you do everything, which is what we recommend for everybody, it drops down to $2,275. And so because when we do this, we're gathering for both of them, it makes it a little bit easier on our end. Same amount of work goes on for either one of them, but when we're combining, we're able to reduce that down significantly. So if you choose to use us, and again, I would encourage you to do it on your own if you possibly can. But if you need our help, this is our website. When you go into, again, getcovidaid.com/envoy, you're just going to look just like this here, and you're going to come down here and you can select all. And these are conversations for later on because we actually, as a triage, we're taking care of this first one first. If this is all you want us to do, you just click on there. It's going to take you to a page that looks just like this here. You'll enter your first and last name, your mobile number, your email address, and hit submit. Now, why do we ask for your mobile number? It is imperative that we have the ability, our team has the ability to get a hold of you. We will use text messages, phone calls, whatever. So if there's questions that we don't have the answers for on your documents or for the SBA loan officer, we can get a hold of you. Then it's going to take you to this here. This is going to be a secure PCI, DSS compliant, HIPAA compliant, 256-bit secure, where you can upload your documents. And so we have it there for you. So in summary, and as I wrap up today, this is, if you look here, the comparison. So 7A is on the left-hand side, 7B is on the right-hand side. So 7A is going to cover your payroll expenses, employee salaries, mortgage interest, rent and utilities, and interest on debt incurred prior to February 15th. It's going to be 2.5 times based upon your monthly average payroll. 4% is the maximum interest rate, 6 to 12 months deferment, and then of course a 10-year term, and up to 100% with approval as far as forgiveness-wise. Economic injury disaster loan, which is 7B, again, payroll, fixed debts, accounts payable, other expenses, up to $2 million maximum, 3.75 for for-profit, 2.75 for non-profit, up to 30 years, and 0% is eligible for forgiveness. So this is more of a traditional type of loan. So I want to say thank you very much for being on today. And again, if you want more information, this is where you'd go. We encourage you to go to the website if you want our assistance. and get in the queue as quickly as possible. If you have further questions, if you'll email us at info@quartermastertax.com, that would be the way we can assist you. Again, thank you very much. We know we're going to get through this here. You know, the Lord is going to make sure that he's going to take care of each and every one of us. He said he's going to provide for us. And this is just a tool that he can use in this particular situation to get our ships uprighted. And I just want to encourage you as ministry leaders and pastors, you know, that we're going to make it through this, and your people are going to make it through it. And we're all going to come out of this here better and ready for whatever the future holds for us. So again, thank you very much. Thank you, Bruce. Thanks everyone at Envoy, and feel free again to reach out to us if you have any questions.
Thank you, Don. That was so complete. I have to admit my head swims a little bit as I try to sort it all out. But the bottom line is the way I understood it was that we've got the 7A program, we've got the 7B program, and then we also have the program for individuals. The goal of our government, of course, is to help the economy and support individuals, and so that the recovery period will not be as painful as otherwise it might be. Also, one of the things that in my conversation with Don Pryor, he had indicated that if in fact someone uses their services and makes application and is turned down, they will in fact receive their money back. And so that's about as open as you could possibly be. And we thank Don and his team at Quartermaster for that. Again, the presentation that you've heard has been part of the toolkit, the presentation that you've heard has been part of the toolkit provided by Citygate. And our particular thanks to John Ashman and his team for all the work now that they have done, they continue to do for his role in interfacing with the federal government on these issues. And I know that he will be providing additional information to all of us as things progress. We know it's going to take longer. We know it's going to cost more, and we know it's going to be more painful. With that, the ability as people of faith to know that we can walk, and that we can walk with grace, we can walk with peace, we can be assured that we are in the hands of Jesus. So we thank you for the time that you spent. You'll be able to review this online and reach out to Quartermaster for any questions that you have. And with that, until the next time, God bless and good day.